Welcome everyone to our vlog. Today we're going to talk about a question we often get. Can I take money out of my business account for personal use?
Yes, thank you for joining us on our vlog today. If you like this content, please like and subscribe to our YouTube channel. So taking money from your business account for personal use. What's the answer to that? What is the answer that you typically get with any kind of accounting or tax question?
The answer is it depends. So really there's a number of different factors that go into deciding or determining whether you can take money out of your business. And some of the first one I could think of is what is your business entity type? So that could dictate whether you can and how you can take the money out of your business.
Yeah, absolutely. Because a sole proprietor, when they take money out of their business, they simply take it as a distribution. There is no ability to take payroll. And that's the same with a pass-through entity such as a partnership.
Right.
But distributions are available to sole proprietors, partnerships, as well as S corporations. And so when you look at that, you are able to pull money directly from the business in those types of entities.
Yeah. So when you're talking about an owner distribution, it's really you're taking out of the profits that the company has already earned and it's already been taxed on. So you don't take it as you know, in a partnership or sole proprietor, you can take it as payroll, but as an S corporation, you could take it as payroll, but if there's owner profits that are available, you could also take it as a distribution.
Right. So in an S corporation, you are able to be an employee of that entity. So you take off your owner hat, which you're an investor in, and then you put on your employee hat and you can get paid for the work that you're doing for the company. An S corp and a C corporation both have the ability for you to run payroll for yourself. A partnership, you are not able to, as well as a sole proprietor. You would not run payroll for yourself. Everything in a sole proprietor partnership would come out as a distribution.
Right. In addition, for a C corporation, the other owner distribution is in a C corporation, it's called a dividend. So a dividend is different than an owner distribution. It does come out of profits, but that's directly taxable to you, just like a dividend from, say Apple stock or anything like that. You have to think it the same way.
Yeah, so it would be subject to taxes, and you would have to pick that up on your personal income tax return if you had a distribution in the form of a dividend from a C corporation.
Yeah. So besides the entity classification, the financial wealth or the financial health of the company will also help determine whether you can take money out of the business. So when you're looking at your cash flow, can that support a distribution to you as an owner?
Absolutely. And a lot of times what happens is a company will determine how much they need to keep in their accounts in order to cover the operational expenses that might be necessary. And there's really no hard number here. It's really based on the judgment of the owners or people who are running as to whether or not how much money needs to be saved in the business and how much could be distributed. So we are going to probably have a blog or a vlog on what to look for and ways to determine how much can be left in the company or distributed from the company. But just keep in mind that you would want to kind of maintain some sort of cushion there to help pay for operational costs in the event that something happens.
Yeah. And all businesses are different. Some are more seasonal, as opposed to kind of even throughout the year. So you may have to, hold more money during the slow times, or, depending on if you have to put out a lot of cash up front before your customers get billed, then you have to wait till you collect from your customers in order to be able
then you're floating all of those expenses. That's very important to manage.
Exactly. So there's no hard and fast rule, and there's a lot of different things that can determine whether you can actually take that money out. your business account.
Right. Now, some people decide that they want to or have the ability to tap into a line of credit. We do suggest people have lines of credit set up for small businesses when they start. It is good to have that for cash flow in the event, like Shawn just said, you didn't get paid yet and you're anticipating that. Or, if you have a larger purchase that needs to be done and you need to kind of finance that right up front. But we do not suggest that you draw on that debt in order to distribute the money to yourself. That's not as prudent of a business choice. Some may argue that, but we feel that it makes a lot of sense to keep that for operations.
Yeah, you don't want to incur debt to pay yourself or to take money out of the company. What you should wait for is that profit and that cash flow to be available to take as that distribution or that payroll.
Mm-hmm. So sometimes people ask then, okay, well, if I am pulling money out of my company, is it a deduction? And again, what's the answer?
It depends.
It depends. Okay. So what we want to say about this is when there is a owner distribution or owner's draw, that is not a deduction. That is not something that is going to come off the net income of the business. But if you are running payroll in an S Corp or a C Corporation, you would in fact get a deduction for that type of pay.
Right. So the owner distributions are out of the net profits of the company. So those monies have already been taxed. So you don't pay tax on that distribution, but you also can't get a deduction. So it's the free cash after you pay tax.
After you pay tax.
And then same thing with payroll though. You as an owner, you're taking payroll out of the company. You have to pay tax on those wages on your personal income tax return, but the company also gets a deduction for all those payroll costs. So you kind of have, it's kind of similar in both ways. It's just the way it's treated is a little bit different, right?
Yep, absolutely. All right. So hopefully we answered the question that we get all the time is, can I take money out of my business account for personal use? And we touched on the entity type dictating that and some other factors, as well as how much is available. And also, is it a deduction and when is it a deduction? So we thank you for joining us today on our vlog. If you like this vlog, please like and subscribe to our YouTube channel. Take care.
Thank you.